Welcome once again to the Capital Spreads Weekly Market View. I'm again joined by our esteemed colleague Bill Hubard. Thank you very much again for joining us. Bill, of course, is Chief Economist of Markets.com. Greece obviously is back in the news again for all the wrong reasons, once again. Obviously, we've got meetings between Merkel and Hollande, the French president, coming up in terms of what they think of what's going to happen in Greece. How's your reading in terms of Greece going forward? They have asked for more time.
Yes. I think it'll be interesting because going into today's meeting, I think it's what, 7 o'clock tonight? Is it?
Yeah, I think so.
Our time or CET. You know, there's going to be a press conference. Almost everybody thinks the press conference will be 1 or 2 words, so to speak, because nobody's expecting either one of them to say anything. But I think what helped, especially helped the euro, was the comments that Merkel said last week when she was in Canada, basically implying that the ECB's bond buying program was probably the right move. And as we've seen just in the past week, a dramatic drop in Spanish and Italian yields. Not so much in Greek yields or Portuguese, but in those two, feeling that the ECB in any type of bond buying program will be short-dated Spanish and Italian. But as you said about Greece, the key is going to be is, you know, they want a 2-year extension.
Yeah.
Well, how much is that going to add on to the total bill? And that's, you know, that's the dilemma. Nobody knows what the bill's going to be. And I think one of the things that you have to look at is if you are a German, or if you're French, you know, again, after the PMI data today, and you're sort of struggling. Well, I don't mean to be nationalistic, but love thy neighbor, but the neighbor next door, not the neighbor in Club Med or something like that.
Sure.
And I think that's going to be very difficult. If this slide continues, you know, wait a minute, you know, and it's not like, I think Greece first defaulted in 350 BC, so it's not like something that it's new. But I think the key thing, and this is what maybe is frustrating to people, is the troika. I mean, I don't know, this is the second, third, fourth visit. You know, the question is, you know, what do the books look like? And, you know, if we knew what the books looked like, maybe we would feel more positive in trying to bail them out. But as you said, it really is the first time we've had sort of Greece in the front page of the newspapers rather than Prince Harry, but that's another story, sorry.
Well, I mean, obviously they've got their audit coming up in September as well. What do you think, Greece in or out?
Well, I'm a member of the Greeks Club, okay? If we'd had this conversation 6 months ago, I figured there was a 75% probability. Now I'm a member of the 90% club, you know.
Oh, wow.
Basically, just, you know, get them out the sooner the better, okay?
Okay. We've also got the UK GDP revision tomorrow. What's your reading of that?
Well, I think, again, it will show an improvement. I mean, my first call was for minus 0.5, as we all know, it came at minus 0.7. And Sir Mervyn and several other members of the Bank of England basically had not been quite nice in describing the data they were getting from the Office of National Statistics. And one of the things that definitely didn't really jive was the unemployment numbers did not make any sense to have a minus 0.7, as we saw last week. They weren't as bad as expected. My call for tomorrow will be, we'll probably see an adjustment from minus 0.7, maybe to minus 0.4. I think eventually, you know, when we get the final reading, which will be in a couple of weeks, it'll probably be minus 0.3 to minus 0.2, but we'll still have a negative number. But I think one of the things that makes it difficult, and this is one of the things, probably to go back to your original question about the Fed, one of the things that the Fed can't do is get the U.S. unemployment rate down below 8%. But we were talking about this earlier.
Sure.
Is there a real question about not the validity of the data, but how many more businesses, or 2 or 3 or 4 small businesses, because Joe Bloggs or Fred Smith can't get a job, so we all get together and we decide to use the expertise we've got having worked where we were. So you're seeing tens of thousands of smaller businesses, both here in the UK and especially in the United States. So these sort of numbers falling through, but I mean, it's still a very difficult problem. But my feeling is tomorrow we will probably get the GDP revised better to maybe minus 0.4. The best, I think, we will see it in the final revision will be minus 0.2.
Okay. Gold obviously seems to be shooting back up again. Why, and where do you think it's going?
Well, you know, I've been very bullish on gold. I mean, gold was sort of like, 1580 to 1620, sort of like the S&P at 1400. Well, it just do something. Now, one of the things that we do, of course, as we know, with commodities being dollar-based, with the hit that the dollar's taken, gold has been one of the safe haven buyers. And so what you've also seen is the spread trade there. Sell the dollar and buy gold. We've taken it 1600, 1620, we now go from 1650 now. Yeah. And one of the things which that maybe a lot of our viewers may not look at, there are a lot of traders out there, professional traders, that do the gold platinum trade. And we've seen a major move in both of these over the past couple of years. Now, one of the things that we have seen is the move in gold is being helped because of the dollar. Now, I know this sounds negative, we're seeing a move in platinum because of horrific events in South Africa. So we're seeing a political move maybe in platinum and a dollar move in gold. My call for at least year end is at least 1750 for gold. So I've been a positive gold bug all year long.
Wow. Your tip last week was short euro dollar. We were trading.
You must have misunderstood
me. We can play back the tape and just double check.
Well, it was a trade. We
trading around 2360.
Yeah, that was the level. You could have put the trade on Thursday after we talked, and it got as low as 122.89 on Friday morning. Okay. Take the position off. You could have put the trade again on very quickly on Monday morning because before most people had read Der Spiegel articles of the positive euro, and again taken out a good 65 ticks. Now what we did advocate was once we did that, that trade was over. If you look at it from a technical basis, it was a very good move, and we were advocating to buy the euro short term, if you will. And then once we took out the 123.65, the 124, key level of 124.44, and now I think we're hovering around 125.
Yeah.
Again, I would be out of the trade as quickly as possible for two reasons. One, remember we have the August bank holiday this Monday. We have Bernanke speaking next Friday the 31st, and then the U.S. is on holiday the following week. So, I mean, if you thought volumes were low, there will be minuscule next week. But as I say, I am still, I guess, maybe it's because I haven't trusted the euro concept since 1957. So anytime it gets a little too frothy for me, I'm a seller in here. But the pivotal point could be next Friday on the 31st, depending on what Bernanke says about, I hate to use QE3, but what will the Fed try to do in reference to providing liquidity to the market and trying to get that, the U.S. economy.
So 30-day, you still be short euro?
Yes, I do. I mean, again, around 125 level is plus. Yeah, I would still. Again, I would lay into the trade and lay out just because it's just too much for me. And the eurozone itself, if with exports, if the euro gets too expensive, okay, then it's a question of what are they going to do with their exports? And one of the things also that we see is you've got to watch now the move in oil. I mean, Brent's up 100 to 115. West Texas, I think to like 98 and something. So that is going to be something that they'll have to look at. Again with the dollar. But now I would be again. I like gold, and have for a while since 8.95. Not the year, but the price of 8.95. And I'm a better seller of the euro. I think one thing we saw the dramatic move was the shorts finally just said, I've had enough, I'm giving up. So it'll be interesting to see what the CFTC data is for this week in reference to dollar euro shorts.
Do you have any hot tip for the week in terms of what you think is going to happen for the next 30 days or so?
I would still be a buyer of UK gilts, because one of the things that you're seeing more and more in the paper now about away from this austerity program and stuff like that, and not so much now because the yield is backed up, but I mean, we're talking 4 or 5 weeks ago, we had 10-year gilts at the lowest level since 1690. So, I mean, my feeling is that the Chancellor and the Bank of, I mean, they should be issuing gilts, till the cows come home, okay? Because the simple fact is, we're never going to get these kind of low yields. And we know that the consumer's not spending. It'll be interesting to see what retail sales are in the next couple of months, pre-Olympics, post-Olympics. So if the consumer's not spending, well, somebody's got to spend, okay? And there is no inflation. there. So no, I would be a continued buyer of short-term treasuries, short-term gilts, and short-term bunds, and you know, I'd pass on Spain and Italy right now. I think that's, you know, too much of a risk trade.
Sure. Well, thanks again very much, Billy, for joining us. Again, thanks very much for watching. Feel free to join us again next week. Thanks very much.